sounding a little bootstrappy here.
I believe that buying a home should be a little bootstrappy.
All right, Mr. Global, I appreciate your response to our discourse here about the housing crisis and what was the cause of it. I do kind of feel like you got a little hung up on the bootstrappy comment because that seemed to be what most of this video was about. And you're kind of doubling down on that. The thing about bootstrapping is it's a phrase that refers to something that is literally impossible. And the phrase is designed to shift a collective responsibility to the individual so that individual can be blamed for not being able to achieve what is literally impossible. Well, you continue to say that it's, the government's fault, which we can both agree on at a certain point. The way you're phrasing this argument is the same way that people phrase the idea of the welfare queen. The people who don't want to work because they live off the government teat. And well, most people in that situation, like you are here, will say it's the government's fault for giving them that money. It's ultimately just blaming poor people for their oppression in a system of corporate greed by constructing a reality that doesn't actually exist that blames those poor people. The vast majority of people who receive benefits do work, and they work full time. They just aren't paid a living wage for their work and therefore need to rely on assistance to get by. And you are doing the exact same thing when you say this.
In my mind, when the government is securing loans for people who have no down payment, no savings, meet a minimal credit score of like 580 and only need a couple of years of employment to make a huge purchase like that, I view that as a form of predatory lending that is sanctioned and secured by the United States government, and I don't agree with that.
It's not a thing. Like, what loans do you think were being secured by the government for these people? Did you get a government-secured loan? I highly, highly doubt it. See, there was no flood of government-secured loans coming out of the Clinton era. And I'll get into the stats on it again in a minute, but just think about it logically for a second. If all of these loans that caused the crash were government-backed or government-secured, as you're stating here, when the crash happened, the banks wouldn't have failed because the loans would have been government backed. Kind of like how when everybody stopped paying their student loans, the banks didn't fail because student loans are government backed. Now, none of us are infallible. We all fall victim to certain types of propaganda and certain preconceived biases. In fact, in my previous video to this one, I did the same thing. I made the mistake of blaming Reagan for the DIDC Act. I saw the act was passed in 1980 and my absolute love for Reagan slander got a little ahead of myself, and I immediately blamed it on him when it was in fact Carter, and Carter shares some of that blame. None of us are infallible, right? And honestly, that's one of the reasons I follow you. You often challenge my views or perspectives on certain topics, and you usually bring receipts to do so, and that helps keep me from falling into echo chambers. And honestly, I feel like you're one of the best people on this app for bridging gaps between spheres to prevent echo chambers. You're relatively centrist, you're generally well researched, and that gives you mass appeal to people from differing ideological backgrounds. So don't allow yourself to fall into an echo chamber here, because that's what your perspective here is a product of, as it's not based in any statistical reality. First off, GSEs, the government secured enterprises, or the government backed, government secured loans you're talking about here, were not new coming out of the Clinton era. These include the FHA, Fannie Mae, Freddie Mac, CRA. Those programs got started in the 1930s and led to the biggest increase in middle-class home ownership in history. If those programs were going to be the ones to cause the housing bubble to burst, it would have burst in the 60s, not in 2008. Those programs existed the whole time, 50, 60, 70 years. It's not like Clinton just magically brought them back. In fact, to the contrary, when Clinton left office, GSE loans were at their lowest market share in their entire existence, around 15%. By 2007, they had dropped to 3% market share. Meanwhile, private loans, private label securities, or PLSs, were skyrocketing at the time. Wanna know why? Because for a bank to issue a GSE loan like an FHA, they had to meet really specific requirements. They had to offer a fixed 30-year interest rate. It took processing time because it had to go through the government approval, and they made less money on them. So all those people you're talking about with the shitty credit scores and no down payment and no savings that were getting loans, those were all private loans, had nothing to do with the government. Aside from the fact that the government was like allowing it to happen because they weren't regulating the banks and had very little oversight. But the government wasn't securing those loans, and the banks were pushing private loans even to people who qualified for government secured loans because it was easier and they could trick people into it with predatory lending schemes, which made them more money. Furthermore, the people getting into trouble when the housing crash happened weren't first-time home buyers by and large, because the banks were targeting a lot of these subprime loans at people who already owned houses, had owned them for years, and built some equity. A borrower who has some equity is a lot better bet for a predatory lender than a first-time home buyer. And they were encouraged to do this because the interest was tax deductible. It was basically free money, you know? So when the ball finally dropped and the bubble burst and mortgage default rates started skyrocketing, you know which default rates didn't skyrocket? GSE loans. In fact, they outperformed the national average by a little bit and way outperformed privatized loan averages. When I say way overperformed, I mean like privatized default rates jumped to like 35-ish%, and GSE loans never broke double digits. And like 80% of the government defaults during the recession came from a tiny portion of CRA loans that were designed to be more competitive with the private subprime industry lending. And those specific CRA loans accounted for only 6% of all subprime lending during that time period. So the crash didn't happen because irresponsible poor people weren't bootstrappy enough. And it didn't happen because the government took away personal responsibility because they were just giving loans away willy-nilly to poor people who couldn't afford them. It happened because unregulated private banks developed low introductory adjustable rate mortgages to steal market share from the government secured mortgages. And they didn't market those to the low income people the GSE loans were targeted towards. They marketed them towards middle class people, many of whom were already homeowners who had equity they could prey upon. Government lending programs have nearly a century of being the hero of stable housing markets and middle class home ownership. Whereas deregulation, privatization, and corporate greed have been the driving cause of every major economic downturn for over a century and a half. Panic of 1819, Panic of 1837, Panic of 1893, Great Depression, stagflation, the Reagan recession, the Great Recession, and now even the COVID recession if we get right down to it, and its ensuing greedflation. So you don't have to apologize for believing that homeownership should be bootstrappy, but please stop using your platform to repeat propaganda that long-standing, historically and statistically successful government programs designed to increase the equity of the middle class are somehow responsible for the social and economic catastrophes that can be laid squarely at the feet of an unregulated and greedy private sector.